What's up everybody, I am Jaspreet Singh, and credit card debt is on the rise along with the interest rates that you have to pay on your credit card debt. Unlike a 30-year mortgage, which is fixed rate debt, your credit card debt is variable interest rate debt, which means as interest rates go up, your credit card balance becomes more expensive because the interest you have to pay on the credit card debt goes up. That means if you have credit card debt right now, it is more important than ever for you to take your extra cash and not use it to pay down your home faster and not use it just to stack a whole bunch of cash and not use it to invest your money. It's more important for you to use this money to pay down your credit card debt as fast as possible because your credit card debt is getting more expensive every single day. Let me show you the power of this. Let's assume that you have $6,500 when you turn 21 and you take the $6,500 and you invest this money. Now, the nice thing about this investment that you make is let's assume that you can get an 18% return on your money every single year. And let's also assume that you never invest another penny again. So you take $6,500, you put it into this investment, you get 18% a year, and you do this until you retire. And now when you turn 66, so 45 years later, guess what? Your $6,500 investment is going to grow to not $1 million, not $5 million, not $10 million, but $11 million. By now, you're probably ready to type something like, Jaspreet, where in the world am I supposed to get a guaranteed 18% return on my money? Now sure, maybe you can't get that 18% return on your money, but do you know who is? Amex, Visa, MasterCard. These companies are charging you 18% or more every single year, and you have to pay this on your credit card balance, and this interest rate is about to go up even more, and you can see the power of compounding this money. $6,500 is the average household credit card debt in America right now. So if you just keep paying the balance, guess what? You are the one that's making Amex, Visa, MasterCard rich while it's keeping you broke. This is the money that I want you to compound for yourself. That way you can make yourself rich instead of making, well, everybody else around you rich. Now, I understand that you can use credit cards the right way. I love using credit cards because of the benefits and perks that I can get, but if you have credit card debt, it is not worth any. It's not worth any of the rewards, the perks, the cash back, any of that, because now you're the one that's making the credit card company rich. So if you have credit card debt, especially if you have $5,000 or more of credit card debt, what I want to do today is go over 5 things that you need to do right now that we can pay down this credit card balance ASAP. The first thing that you got to do is you have to stop spending money on your credit card. Okay, if you have credit card debt now, you want to take these credit cards, either cut them up, put them away, don't look at them, and just start spending money with cash. Use a debit card, use cash. That way you can't even risk putting more money on your credit card balance because now you just got to get rid of that credit card. You can tell yourself that you can handle your credit card as much as you want, but as long as you have the credit card balance on your account, you need to take your credit cards and put it away. That way you can't accidentally spend that money on your credit card, because right now, when you have this type of credit card debt, it is skinning you alive financially. You got to get rid of this credit card debt, and the very first thing you need to do is get rid of the credit cards. That way you can't accidentally put another dollar on these credit cards because you need to pay them off ASAP. The second thing that you got to do is you got to organize your credit card debts, because if you have more than one credit card balance, you need to know which one you should be paying off first, because some credit cards are going to have higher interest rates, some of them are going to have different balances than others, so you need to organize this. Take a piece of paper, write down how much balance you have on each credit card and what the interest rate is. If you have 2 different credit card balances and one of them is in a 0% APR period and the second one is charging you 18% a year, you got to pay down the one that's charging you 18% a year right now, and then once you pay that down, that's when you pay down the 0% APR credit card. If you have a bunch of different credit card debts, then you can decide if you want to go down the snowball or avalanche method. The snowball method means that now you're going to pay down the credit card balance with the smallest dollar amount first. So if you have a credit card balance with $500 and then $1,000 and then $2,000, you're going to ignore the interest rates and you're going to pay down the one with the smallest balance first. The only exception for this, I would say, is if you have a 0% APR balance, hold off on that one, pay off the ones that are actually charging you interest right now. The second, which is the debt avalanche method, is if you have a bunch of different credit cards, find the one that has the highest APR first, the highest interest rates first, and pay that one off first. So in this one, you're going to ignore the dollar amount. You're only going to look at the interest rates, find the one with the highest interest rate, pay that off, then go to the second one, then the third one, because in this debt avalanche method, you're going to pay off the one that is costing you the most money first. I don't really care which method you pick as long as you're paying down your credit card. The debt avalanche method will save you more money, but if it's easier for you to stick with the debt snowball method because now you're paying down the ones with the smallest balance and you feel excited and you feel happy because you're getting the wins, it doesn't matter as long as you're paying it down. Now, depending on your credit score and depending on how much different credit card debt that you have, you might want to consider moving your balances over to a 0% APR card. What this allows you to do is typically you'll get like 6 to 12 months of a 0% APR period, which gives you a little bit of a cushion to start paying down this debt aggressively without paying any interest. But you have to keep in mind that after this period is over, you're going to have a very high APR rate. So depending on how aggressive you're going to be, you might be able to use this 12-month period as an opportunity to pay down this debt aggressively. But if you don't pay it off, well, now you're going to be the one paying the price because now you're going to have to go back to paying even higher interest rates. Third, you got to prioritize what's important to you. You will always find a way to do, buy, or achieve whatever it is that you want to do. I really learned this back when I used to guest teach in Detroit public schools. So every week I used to go there and talk to the kids in high school about money and entrepreneurship and motivation and leadership and all that type of stuff. And I remember when I was talking to the kids, I was asking them how they can start investing their money with just a couple $100. And I remember the kids saying, where am I supposed to get this couple $100? And so I started to talk to them. And a lot of these kids worked jobs. And I saw that some of them were wearing nice shoes, a lot of nice Jordans. And I asked him, how much did he pay for his Jordans? He told me he paid $500 for his shoes. I said, where did you get the money for your shoes? He told me about the extra hours he put in at work. He told me about the sacrifices he made. And he told me all the things that he had to do to get his shoes. When I asked him, you wanted to get those shoes, so you got the shoes, right? He said, yeah. I said, well, if you really wanted to invest and you needed a few $100s to start, you would find a way too, right? And then he kind of understood what I was trying to say. But if you really want to do something, you will find a way. If it's not that important to you, you're not going to find a way. You're going to want to go out to eat at Benihana's every single week. You're going to want to go to Disney World. You're going to want to get your spouse something nice. So you got to prioritize what's important for you. You're going to have to make sacrifices and not buy some of the things that you want. That way you have more money to, well, pay down your credit card debt, because this is holding you back from achieving so many things that you want to do financially. And that also means you got to start prioritizing where you're going to be putting your money. When you make that decision to become wealthy, is going to be like a switch, and you decide that you want to become wealthy, and all of a sudden you're going to want to do a whole bunch of things. That way you have less liabilities and you can have more assets. You're going to want to invest your money into places that are going to make you more wealthy. So you might say, oh, well, I want to pay down my home. That way I don't have to pay this 4% mortgage anymore. Or maybe you say, I want to start investing my money. I want to start investing my money in the stock market or real estate. So let me just put invest. And in this case, you might be getting an average 7 to 10% return a year. This is the average return in stocks and real estate. Or maybe you say you want to invest your money in crypto. Sure, maybe you can see 7 to 10, maybe 10, 15. It just depends on where it is that you're investing your money. You see more risk, you could see more upside, you could also see more downside. But what you end up doing when you're throwing your money here or here, which are good places to be putting your money, is you're missing the opportunity to pay down your credit card, which is charging you 15 to 25% a year. This is a much better investment than paying down your house. It's a much better investment than investing your money right now, because right now, this is going to give you a guaranteed 15 to 25% return on your money, because that's interest that you will no longer have to pay to your credit card company. We already went over what type of profits are possible when you get an 18% return on your money. Well, you're giving that 18% return to your credit card company when you carry credit card balances. If you have credit card debt, you should not be worried about investing your money. You should not be worried about paying down your house, and you should not be worried about going on vacation. Right now, the only thing you should be worried about is how fast you can pay down this credit card debt. Now, I know this isn't the most fun thing to do or the most exciting thing to do, and people are going to think you're weird when you turn down trips and when you turn down nights out, but you got to prioritize what's important to you in your life. If you want to be financially free, you want to be wealthy, you have to prioritize paying down your credit card debt. This is a mental thing. That means you got to prioritize where you're going to be putting your extra money and where you're going to be putting your extra focus. The fourth thing you got to do is you got to live smaller. So now you got it. You want to pay down your credit card debt. You've organized your your credit card debt. You know it's important to you for you to pay down your credit card debt, but how do you actually pay it down faster? Well, the fastest way to pay down your credit card debt is to have more dollars every single month to pay towards your credit card debt. And the easiest or most simplest way to get access to more dollars right now is by having less expenses, because now you have money coming in and you just want to have less money going out towards your expenses, so you have more money left over that you can use to pay down your credit card debt. Now, you don't got to do this forever. Once you pay down this credit card debt, now you have this extra money that you can use for your investments, your savings, and for your fun. But right now, we got to pay down this credit card debt, and the way that you can start living smaller is one, by downsizing. Well, if you have a big home or a big apartment, maybe you downsize for a couple of years. That way you can save some extra money on your rent or your mortgage. If you don't like me now, then you're definitely not going to like me after this, because another way that you can downsize and save a whole bunch of money is by selling your car. If you're paying $300, $400, $500, $600 a month in your car payment, and now you got to pay the high insurance after that, and now you got to put in premium gas in your car after that, you are spending so much extra money on your car when you could be using this money to pay down your credit card debt. So what I want you to do is take that car, sell it, and now go buy a used but good working condition car with cash. That way you don't have a monthly payment anymore. Now when you don't have this monthly payment, you can take that $500 that you were putting towards your car and use that $500 to pay down your debt every single month even faster. Then you gotta stop buying so many things. If you're not already doing this, start tracking your income and your expenses. This will immediately change the way that you spend your money without actually making any drastic changes in your life. All you have to do, either you get a piece of paper or you open up an Excel sheet or a Google sheet, and what I want you to do is on one column, write how much money you made. And then on the other column, I want you to write your expenses, and I want you to be detailed here. So every month you're gonna do this. So at the end of the month or the beginning of the month, you're gonna write down every single penny that you spent and where you spent it. Write down how much money you spent at food on restaurants. Write down how much money you spent at groceries, how much money you spent going out and entertainment and movies. Write down how much money you spent on donations and how much money you spent on gifts. Once you do this, you're gonna get a much better picture of where your money is going. And as soon as you see where your money is going, you are going to immediately, this doesn't even require any sort of financial education, I guarantee it, you're going to immediately start changing the way that you spend your money, because you're gonna see where your money is going and you're gonna say, holy guacamole, I spent how much money at Chipotle? After you do that, I want you to start working on your subscriptions. So if you have the massage membership, that car wash membership, and the 4 or 5 different streaming service subscriptions, start thinking about what you really need and what you're gonna let go of. Remember, right now it's all about priorities. That Netflix might not cost you that much. I don't know how much Netflix is. I don't watch Netflix, but let's just say it's $15 a month. It might not seem like a lot of money, but if you're spending 2 hours every night watching Netflix, it's really not the money that's eating you. It's the time that you're wasting watching TV that you could be using to maybe earn more money or do something better with your time. That way you can use your resources to pay down your credit card debt faster. So you want to start really getting rid of these subscriptions, that we have less money going out and more money in your pocket. That way you can use this money to pay down your credit card debt, and more brain power to find more ways to pay down that debt. And finally, when it comes to your subscriptions, I want you to use this as an opportunity to start negotiating some of your bills. So most of your utility bills, your cable bills, your phone bills, your internet bills, a lot of these service providers will be willing to lower your bill if you just ask. Now, the key here is when you call up the service department and you ask them about lowering your bill because your bills have been going up, you have to be nice, okay? Because these customer service reps are getting yelled at by angry people all day and night long. So you want to be nice to them and ask them about why they raised your bill. Ask them if there's anything that you can do, because you've been shopping around and you see that some of their competitors are offering much better rates. So now you go there and you talk to them, see what they say, and that's where you want to push back and say, oh, really? Is there anything better that you can do? No matter what number they come back with, you want to always ask that question after they see if they can do anything better. That's when you're now going to propose a number. You don't want to go out there and just pitch a number right off the bat. You want them to see how much lower they're willing to go. After they go lower, then you want them to negotiate against themselves. And once they negotiate against themselves, that's when you want to present your number. Now, when you present your number, they're probably going to say no. And if they say no and you've been nice, ask them if you can speak to a manager or somebody else, because the manager or the supervisor has the ability to do a little bit more negotiating room on your bill So ask them if they can do that, and now all of a sudden, you have the same services, but less money going out. And the fifth thing that can accelerate you paying down your credit card debt is earning more money. So now you understand that you prioritize your credit card debt, you know that you're living below your means, you're no longer using a credit card, and you're creating a margin that way you have extra money to pay down your credit card debt. The next thing that you can do to have more dollars to pay down your debt is just to earn more money. The way that you work to earn more money is going to depend on you. Maybe you work harder at your job, you get a raise, you get a promotion, you work more overtime hours, you get more cash, that way you have more money to pay down your debt. If that's not feasible for you, then maybe you work to create a side hustle or you start your own business. That way now you have your income, but now you're working to create even more income. That way you have more cash, but you have to remember, prioritize. What are you going to do with this extra cash? You're not going to use it to go out and buy a new Beamer. You got to use this cash to pay down your debt. Every extra dollar that you make right now needs to be used to pay down your credit card debt. So when you get that $5,000 bonus, don't use $3,000 of that to go out and finance a nice new vacation. Use that money to pay down the credit card debt faster, all of it. I know, this sucks. You worked so hard to get this bonus, you worked so hard to make some extra money, but this is where it's so important for you to prioritize what's important. You're gonna take this money, pay down your credit card debt, and once that credit card debt is gone, now you don't gotta worry about it, because now you're gonna be smart enough to not do it again. And now when you earn more money, you're gonna be able to use this money to make yourself wealthier and to make your life better. That we don't have to worry about making the credit card company rich. The reason why I save earning more money for last is because you have to understand how to use your money and build the right mindset first. Because if you just start earning more money right in the get-go, but now you have more money, but you don't know how to use it. This is why you first need to build the right mindset. You need to start living below your means. You need to start prioritizing what's important. And once you build that system, this is where earning more money is going to have the biggest bang for its buck, because now when you earn more money, you know what you're going to do with it. You're going to use this money to pay down your credit card debt, and once your credit card debt is done, now you're free. And now you can move on to the more fun and exciting things like investing your money. This, once you pay down your credit card debt, is when you should really start focusing on investing your money in stocks or real estate or cryptocurrency. And if you're looking for more education on how you can start investing your money in the stock market, well, we have a free 1-hour lesson on how you can start investing your money in the stock market in our Market Insiders app. It's an investing education app. You can watch this 1-hour lesson for free. And if you want to watch this lesson on how to invest your money in the stock market, I'll put the link to how you can do that down in the description below. If you enjoyed this video, here are the untold truths about money that they never teach in school. And while you're at it, if you want to watch a free lesson on how to invest your money in the stock market, all you got to do is click that button below. Thank you for watching, and as always, keep hustling. My first real job, real technical job, was at Auntie Anne's Pretzels, where I made $5 and I think 45 cents